All right, cool. Let's jump into it. It's what are we at? 10:37 on the Tuesday. So sort of start off with the Aussie here, just because we do have a little bit of data coming out soon. 11:30, so just under an hour. We got retail sales coming out. Previous 0.2%, expected at 1.2%. So quite a significant sort of jump up there, but I guess this is maybe sort of accounting for sort of all your sort of Christmas sales and all this kind of stuff. I can't remember exactly off the top of my head, but some ridiculous amount of money spent in terms of sort of presents and all this kind of stuff. Well, basically just general spending. I mean, it's not just presents, it's food, it's this kind of stuff around the Christmas period. And then, of course, sort of like that's not even to take into account. You got Black Friday. I think that was around sort of start of December. So that I might be wrong with that one there. But then following on from that, you've got uh, Boxing Day sales and all this kind of stuff. And obviously, Boxing Day sales will spill over into January. But I heard some sort of figure predicted of 29 billion spent into the middle of January, I think they said the sales run to. So probably still another couple of days on those sort of sales. So obviously all that kind of data that won't flow into this, but just amazing how much yeah, people are sort of spending on that kind of stuff. Particularly every single time you turn on the TV, everyone's going, "Oh, we've got no money, cost of living, all this kind of stuff is really pinching on people." Yet they're still coming out and spending, I think, maybe almost in record numbers. So either, the news is sort of touting that up and they're sort of saying, hey, making it sort of seem like a worse problem than it actually is. Of course, it's a bad problem. I mean, there's always going to be people that are doing it tough. But as I said, like the way that the news puts it is that the vast majority of people are doing it very tough. And if that is actually still the case and they're still spending all this money, people must just be absolutely abusing their credit cards. So, you got to look into that as a bit of a factor of stuff as well. That, like, that stuff's just building on more and more debt. So that'll definitely sort of play into things sort of down the track as well. Like, it's basically all these sort of people just spending beyond their means and that. It's just kicking the can down the road with the issues. So, yeah, it'd be interesting to see sort of where we come out with this, but sort of the textbook response with these kind of retail bits of data are that, if it comes in higher, well, it means that people are obviously spending a lot, which I sort of just went over. And if they are spending a lot, then, what the central bank want to do is curb that spending habit. They want to sort of really reduce it down, which will then, if people are buying less, then the people on the supply side of stuff still need to make their targets. They need to pay their bills. So the only way they can get those sales is by reducing prices a little bit. So instead of like, if coffees are there for $5 or $6, and then all of a sudden people will go, well, damn, they've just put up the interest rates. Instead of having 5 coffees out a week, I'm only going to have one. Well, these guys still need to make the sale, so hold on, maybe I'll make my coffee 4.50. And then sort of people go, okay, well, I mean, if they're 4.50, maybe I can have two or three, and that'll sort of help sort of get the market back into that sort of bit of equilibrium with the supply and the demand. I mean, coffee's just an example with it all, but realistically, what they try to do is raise the rates to curb people's spending habits. And so the extrapolated out idea of that is that if people are still spending ridiculous amounts, well, they're not doing what the RBA want them to do, which is spend less. So what can they do from that? They can raise rates. And as tough as it is for some people, that is just the reality of it. The market doesn't care. It is what it is. The RBA have got their job to do. And so that's the textbook response. But as I mentioned earlier in that, we've also got to factor in the idea that this isn't a normal spending month. It's a Christmas, it's a Black Friday, it's a Boxing Day sale month as well. So that as well can also be figured into the actual sort of rate rise, well, not the rate rise, excuse me, the increase in Aussie retail figures. So yeah, anyway, that's just a little bit of a background of sort of the data and the news that's coming out in about 45 minutes or so. If we actually look at the chart, and I'll start with Aussie, I actually missed my daily update yesterday, but if you go back on the weekly review, I drew in this sort of like curved line here, and I said, look, this is most likely what we're going to do here. Like we did have a little bit of a push up early through Asia yesterday, which I actually sort of caught some nice sort of positions here, just a nice little short, sharp one, and then bang, it just got hammered down, and it didn't really have much reprieve through most of the end of Asia and then sort of through Euro session. But on the different platform, like so I trade, this is just what I use TradingView to trade through, but I actually sort of chart and trade through IG as well. I noticed this little wedge coming out. It also came in, if you got onto the 4 hour, it had a little bit of a 4 hour support, which you can see through here as well. So with these two little parts here, I actually got some nice positions, sub 67. So that was the little support there. So you've got a bit of a sort of like, as I said, the wedge isn't so evident here, but certainly the 4 hour support, that is, if you go onto, anything like the 1 hour or 30 minute or so, you can see that it was kind of pinching into this sort of little wedge area here. And with this little wedge area, it gave this little sort of measured move here. Template for the measured move. And this obviously gives us a move back out to the top side here. So, I mean, there's a whole bunch of stuff going on in this chart here. So it's a crossing over with it all. But realistically, the overall picture is that obviously we sort of hit this large sort of price target area, market agreed, and bang, sold off. Coming into a new year though, this is obviously tail end a little bit of December, start of January. This is, if you think about this, if this was on like a sort of a much higher, actually you can probably put it onto like say a monthly, put it onto a 3 monthly, should be fine. It'll show a top wick, and we could be potentially just making a bit of a bottom wick at the moment here. So this is obviously as we hit the target, came back down here. This could be the sort of bottom wick of the 3 month, 6 month. As I said, there's a bit of a sort of a falling resistance here. Could be the back test of the top side of this as well. So the important parts with this are to sort of mark out these kind of levels here. So if we go here and we say that, look, this is our so this is the monthly open body fill. That's a target. If you actually sort of go back and say this is, I can actually get rid of this one. This must have been from this must have been from one of the other months, obviously. So, sorry, I'm just sneezing away there. It's a little bit crook actually, just from being away. But yes, so if we go, but if you go back and have a look at sort of a couple of my gold videos, this was when we were sort of coming up through, I think it was like through the 2000s, before we had the big explosion. So the areas that you want to see here. So let me put this onto a smaller thing. And below. I've just realized that was a 3 months, but that's all right. It still works out the same. So this is the monthly view here. So as you can see, this is quite a strong close of a monthly. I mean, this is, we haven't closed above this since, it's this Feb last year. Well, technically we didn't actually close that month above that there, so it would be January last year. Is the only time that we've closed above where we closed in December. This is a very bullish thing. It means that sellers here push it down, sellers here push it down, sellers here push it down, time and time and time again. Well, the sellers that were in this period through here have relinquished a little bit of their hold, because every single time it hasn't been able to sort of close down under here. And this is what you look for, the sort of the change in pattern, the change in structure. What is it doing that it hasn't done, not before, but previously, most previously? Because we know that, like if you look at this here, people that are trading the monthlies, this is where the sellers are. I mean, there's no question of it all. You can literally see it on the chart. So where are they now? You know what I mean? They allowed it to go up here. the buying power and pressure and that to get a monthly close has come up over the top of this level here. Oh, sorry, a little bit sick still. Um, so that's certainly quite interesting to sort of see it on a monthly close here. But back to what I was saying, you've got the key levels to look for at the moment are this monthly body fill. So this is the open, R week of R month, and the major one for it, well, I say major one. Major one's probably realistically to get above this 69-cent level. I think that's more of the major, but we came very close to it with last month's week. This level to take out previous month. This is important-ish because obviously, you know what I mean. We've seen this is where the top end of where the sellers were in this whole sort of area where we're sort of going, okay, sellers here, sellers here, sellers here. Sellers really drove it down hard from this point here. But so you want to get above these, and then obviously you're looking for this next sort of level up above here, which is obviously up over that 70. So that'll be a big one. If we get over here, so let's just put a little alert on this one. We'll call this one major break. Oh, that's not it. Monthly major breakout. That's a huge one. So the alert's set for that one there. I mean, not that we need it, but still. So this one is previous monthly top week. So these are the three levels that I'm sort of really looking at to be sort of taken out. 68.10, 68.39, 68.70. You know, all these things in change kind of thing. But they're the levels as we saw with the gold when it was sort of moving back up to go over 2,000 and then take out the previous monthly's previous month's wick. That's what's going to give us a signal that this whole area down here at the moment is really just a liquidity grab. And it comes up here, moves and flips, and that's really going to give it a lot of firing power to push up to the top side. Because we look at this on a monthly here, this RSI has been dead through most of 23, just, you know, right down the middle, and now it's pushing up to sort of like come up with it. We've got room to move on this monthly. If this monthly candle flips and takes out that previous wick high, you know, we could definitely sort of be seeing above 70 in some time soon. The RSI supports it. You need to obviously get the flip of this here. But, you know, this was still a big body candle. You know, you're not seeing these sort of little indecision sort of doji candles. That was a pretty decisive bullish candle for the monthly close there. So, yeah, in the short term, they're the levels that you really want to get above to sort of see further continuation. That's on a monthly view. So that's obviously a broader sort of view. The here and now, as I said, on the weekend review, is that I sort of said, look, it's coming back down here. I have a good idea that we're definitely going to come back up to at least test towards these areas over here. So we put it on a 4-hour, and I drew this line coming down here. And as you can see, it played out to it perfectly. Came back down, retested, shot back up over here. So really what it's doing here is sort of coming around in a bit of a cup sort of formation. What this is going to give us is, you know, I mean, we've got to contend with potentially this falling resistance here. So we've seen that this one, you know, sellers, 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 that's 3 touches. That's good enough to expect that when we do get a touch up with this line, we are going to see some sort of effort by the sellers and profit takers to try and sort of push this back down. So we'll have to sort of pay attention to sort of what happens here. This little mark up the top over here, this is a little price target based on if this was a little flag sort of coming through here. So this is an end all sort of price target, but you know, you can see that this sort of lines up with the measured move. We are sort of coming through the top end of this sort of, I guess it would be a bit of a falling resistance flag area here. But, you know, we need to get above these highs to really sort of confirm that this is a flag moving out. This is all just sort of potential at the moment. We are coming into an area in which we've sort of seen the sellers try to push it down before as well. So that is something that we've got to sort of contend with in the short term. So if we can get a push above 24, the levels in the short term, if I clear this up a little bit, Where are we at? So wick highs here, which is obviously pretty much a fill with that body as well. So 67.35, and then where was that wick? Probably around this level here. That's 67.47. They're the levels that we got to sort of beat in the short term. So, you know, I mean, I still think that we have some upside on Aussie, given all things considered with that. But as I said, retail sales coming out now lower in the thing. I mean, retail sales don't mean as much for the Aussie as they do for US, it seems. But CPI tomorrow for Aussie, and then we've got CPI for the US on Friday. So they're going to be the big ones to pay attention to as to sort of what we're going to move. And so if we're looking for the long positions, we want to get out of this little short-term channel. We want to retest these highs. And as you can see here, the monthly body open, monthly top wick, previous top wick, they're the big ones that you want to see taken out if we're going to see a big move to the top side with Aussie. So yeah, basically at the moment, we're just sort of seeing a little bit of a pushing down. In terms of today, if we get back on, this is on the 1 hour. Yeah, I think so. If we can hold above 67, this is obviously this little wick down here, 67.05. I think we could sort of potentially see a little bit more of a move to the top side here. Oh, not that one. Potentially like a little triangle break of the slot here. But we are seeing a little bit overbought here. I mean, it's always a bit of a funny time till we sort of get DXY online and get things moving. All right, so flip across, have a look at gold. Gold got hammered a little bit through yesterday. As you can see, that's NFP wick lows, and it took that out quite strong. Sorry, it's the damn sickness. So yeah, gold got hammered through yesterday. It really sort of didn't see too much in that until this was sort of like middle of the night or local time for us anyway, and we saw quite a sort of push back up. This is a monthly open. This must be on a different month though. So where are we at? This is actually sort of going back to, as I said, this is the example that I was giving with the Aussie. And this is at the time we were at, I think we were down here in 1980 or something like that. Oh, sorry, yeah, 1980, 1990s or so. And you can see here that we sort of marked it out and we had the monthly open, which is obviously in line here. Price, this was just a big liquidity grab. Came back up here, flipped the monthly open, took out the previous month's high, which was the 2052, and look at the reaction. Bang. I mean, obviously gold's slightly, well, it is a different market, but the idea with sort of actual candles and price structure is still the same. That it was coming down, liquidity grab. Once it took out those levels, the people that had got short here, and obviously the rest of the market was taking notice, they're just more ideas to sort of, more portions of the market to start buying it to add fuel to this big push to the top side. Anyway, again, that's broader view. More interested with the here and now at the moment. So certainly sort of come off the lows quite strongly here. We're seeing a little bit of a push up to the top side early. You want to see it get back up into this range over here because, as I said on the weekend, gold seems a little bit lost at the moment. It's had this big sort of spike NFP thing going out here, but you know, realistically, I would say, you know, that's kind of like, you know what I mean, that's news driven. It obviously got hammered into afterwards. So this would be a little range that I'd be wanting to sort of see it back above 2050. Obviously a little bit dancing around. We can get rid of these ones just for now to clear it up a bit. But I would call this the kind of structure that I'd be looking at the moment. I guess you could say there's a tiny little range in the middle here as well. This little section here, which obviously stopped it as it was trying to come back up. So I think if you could take out 2036, you know, we should be looking for at least a test of 2050, bigger breakout or bigger sort of level to get above 2050, then take out that wick at the top over there. So I'd say if we put this here, price target there, I'd say, you can see But this is all predicated on a continued move to the top side, of course. You can see a little bit of a divergence coming through with gold here, as it sort of did move down. If you pick out these lows here, these lows here, and then you sort of say, okay, price is moving down. What was this doing here? Here's your low, and here's your low. So this has obviously sort of come down further on less sort of buying pressure. There was some talk of the stuff that was happening with the Saudis with the oil, that obviously affecting flows in the market as well. So that could have played into it. I'm not a big oil trader. I do obviously pay attention to sort of little bits of news and that sort of pop out from time to time, but that could also be a contributing factor for a little bit of this price action sort of through the end of the night, or overnight sessions basically. But you'd want to take out sort of 2037 or 2030 now. If we can see that 2050 or 2047 is about the next sort of price target, a break above or a close above that, as we see, we've got sellers. This is just in the short term. We got sellers here, we got sellers here, we got sellers here. I guess you could say we got sellers here, but yeah, as I said previously, that one's a bit of a news-driven thing. But the sellers are pushing it down; they're not allowing it past here. You want to see a change in that behavior. You want to see that sort of like, price comes back up here and we don't just see the sellers that are here, sellers here, sellers here. They just go, oh, that's great. Look, another chance to sell it. Push it back down. You want to see that that gets depleted and it gets a candle that closes above there. That shows the depletion of the sellers. It doesn't guarantee the move, but it puts it more skewed in the favor of it actually sort of moving higher. So if we can get a close above this zone here, above, call it 2050, because you don't want to get just a scratch above, doesn't really count. You want to get a decisive close above, little back test to sort of, show that, support and resistance, they're the same thing. And then once you sort of got that push there, you can push through and then look to fill that wick as the first target. And so that gives us 2060 for that level there. So again, got US CPI coming up. That's going to weigh into people a little bit. Yep. With a current temperature of 11 a.m. alarms going off. And yeah, so I think sort of gold definitely looks like it's given this sort of negative divergence here. This is on the 4 hour. It should be worth getting a little bit more of a push up to the top side. Confirmation in the short term would be above that wick from last night, so 2036. So $5 off from there at the moment. Once we get above there, I think this is what I'll be looking to sort of trade, sort of moving forward. All right, DXY. DXY, if you looked at my video again from the weekend, I said, look, we've got the indecision happening. If we get onto the daily, we can see it here. This was this particular candle here, which is Thursday's candle. This is a hanging man sort of candle with a bearish close. Generally a sign that you've had the first try to sell down, second effort people trying to buy up. This is a reversal kind of thing, most likely. Like, what I mean, more often than not, I would say. Nothing's ever guaranteed, particularly with DXY. It likes to sort of make it look like it is, and then it just blows you out anyway. But this is a typical sort of reversal zone of candle. We obviously had the Friday just wicks going absolutely everywhere. That was off NFP, then being sold into ISM, bang, all this kind of stuff. And I said, look, we're going to see a little bit of stuffing around in this area, and that's exactly what we had. It had a little bit of an attempt to push up. That's why we saw Aussie sort of a little bit weaker through yesterday, and then obviously it sort of succumbed to it in the sort of latter part of the session. So we're seeing this sort of, it could have almost been a bit of a microphone thing, but it's failing a little bit here. These kind of large sort of areas here, I don't trade this kind of stuff. Well, I haven't typically had a great deal of success with trading these sort of things, but this technically is a bit of, I think what you call a diamond pattern. Well, not I think, I know it is what you call a diamond pattern. You probably would, to me, like anything, I like them when things are more symmetrical. So something along this. But the idea with the diamond is that you've got an area of consolidation. You have these high super wicks, high low kind of thing in the middle, back to consolidation, and then a break. Okay, they're typically reversal sort of setups as well. But if you drag this one through here, that's the best it's got. so far as it is. So that makes me think that sort of like, I mean, I don't want to sort of say that, yeah, okay, we're going to the downside straight away, because as I said, I prefer things to be a little bit more symmetrical. So it would be something like this, which means you could potentially have a little bit of short-term upside here before sort of coming back down. But, you know, we are breaking, it was quite a significant breakdown to the bottom side here. I think what we sort of look for here is a break of those lows, which we can see obviously sort of lined up with the body closes. This was through, was this NFP? Yeah, it must have been through NFP. Excuse me. This was yeah, after NFP, so this is coming into the close of the week. So if we could break these lows and get a close down under here, which is obviously Monday's or Tuesday morning's lows as well last night, that for me will be confirmation that this is the bottom of this little area here. So breaking the Monday and Saturday lows there. So as it does, just from a structural sort of point of view at the moment here, it does look like it's, you know, had a little bit of support through this area here. You can see, you can see, you can see. So, I mean, if you dragged this up and sort of actually had a look at it and said, look, that's the support area there. Bias, 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 bias. We broke it, came back, retested, pushed down, a little bit of a rolling over here. So you want to see it take out this bottom level here to sort of confirm that this is the top part of this move. If it breaks above here, then we could just really be looking at something along those lines here. Let me get this one out of the way. So let me jump back onto the 1 hour here. They're really your levels that you're seeing play out along here. So you want to get to the downside here to see a sort of continuation of a sell down. If we get back up into this range, then, you know, obviously looking at retesting the top side here, if not sort of coming up and sort of finding some bit more symmetrical diamond top for DXY. We'll just have to sort of see how, obviously, how that sort of plays out once it comes online. 25 minutes till we got Aussie retail data coming out as well. Okay, so flip across, we've got copper. Copper had the break of this rising support that we've been sort of watching. So maybe better on the daily, we can see it. This puts it on warning, the break down here. Though copper tends to love to do these little sort of fake breakout things. There was a couple of times, if you go back through the videos and that, you see them on the lower time frames as well, that it'll have like a bit of a channel setting up. It'll be looking like it's, yep, excellent. Like I think sort of at one stage we were trading through this, something like this. I don't remember where it was exactly, but that was the general idea of it. And it does these little fake breaks to the downside here, and then obviously bang, fires straight back up again. So it's something to watch with copper, because it's sort of like, that's why I said I put it on warning. I didn't say, yep, it's failed, it's breaking down, because obviously it's coming into this previous area that we had marked out. We know that this has been support through this area. It's been a bit of a sort of resistance zone as well, and it's played its part as support here again. So it's on warning for the fact that it has broken this little sort of rising channel that it was in, but given its previous price action and the way that it handles itself, that by no means means that it's dead yet, because it does have a habit of just going bang and then sort of shooting back into it all. So obviously dragging in some shorts and then sort of pushing back on. This is on the daily, and look, it's the RSI is right down in this oversold area, is looking to turn and sort of push back up. And again, this is sort of coming through end of December, start of January. So if we get back onto our monthly looks, this again can just be a bit of a liquidity grab down to the top, to the bottom side here. This has got a bit more closer to a doji. It's still obviously a bit of a bullish monthly candle close. That's obviously showing some sort of indecision around these levels here. Not as much as to get one of those like proper sort of flat, sort of like small bodied dojis, but it's certainly not as strong a conviction as to get a big sort of close to the top side here. But by no means means that it's rolling over or dead yet. We do see actually, now that I look at this on the monthly, a bit of a sort of push down here come through this area. So certainly, as I said, it's on warning at the moment, but I'm not writing it off as of yet. I still think we have upside here, mainly as well because I think that the US dollar is still going to be coming down, and as it comes down, that's generally beneficial for copper. So that's just something to sort of keep in mind as well. The here and now, I just want to see it back up into this channel. Take out these weak highs, get above sort of 387-ish, and then sort of come back up over to this top end over here. But yeah, certainly I think it's, as you can see, even with this is moving down here. And at the same time, what's price doing? You know what I mean? It's a negative divergence. We're seeing that sort of like prices push down here, well, buyers are just absorbing everything and they're pushing it back up. And this is why we're getting that little reaction up off there at the moment. Oh, Jesus, damn sickness. Okay, finally, just a little bit of China. Jeez, there's a whole lot going on this chart, but basically, China is just back into its new little grind. We saw it do a 3-month grind through the last quarter, or just before the end of the last quarter, and then we got these major breaks to the downside, which have been trading the downside of this for a while, but obviously a couple of fake breakouts in here as well. We know that the buyers have been here. These are monthly areas. We knew it was going to be hard for them to sort of get down under here. So again, you want to see, this is why it's important to see the close down under here. It looks like it's going, bang, fires back up. Looks like it's going, bang, fires back up. We want to see it close like decisively under 710. That's an area in which I want to see a solid daily close to go, okay, yep, it's done with this area. Bang, we can move down for the next one there. Because, as I've sort of said a couple of times, I do believe that this is moving to the downside. But, as we've seen previously, it loves to grind. And the amount of times that I got sort of sucked in here and a push back up, sucked in here, push back up, you know what I mean? It's not sort of outside its normal sort of price action. And this is what you look for with all charts, all instruments that you're trading. You want to see how does it trade, you know what I mean? What kind of little kinks and sort of, things does it do specific to itself? So you can avoid the little traps and you can oh, this isn't outside the norm of, price action day to day, week to week, hour to hour, whatever it is. And that way you can sort of get to know it a little bit better. You can pick out these levels, and when it does these fake breakouts to the downside, you're not going, oh my God, well, what's going on here? Maybe it's going all the way back up over the top over here. Look, maybe it still could. We could still be seeing this larger sort of head and shoulders pattern play out. But we knew, this is why we had the price target here, that this is going to be a hard area to break through. And it came down here, hit the price target a number of times, and it's been a hard area to break through. That's why we put the price target here. There's no point sort of trading it, and saying your price target's here, or unless, you know what I mean, if you have multiple price targets, that's fine, but, wasting time holding something through this area here. Take your profits, go to the price target, wait for the next confirmation, and move on. Anyway, look, that's about it from me.